Mid-caps lead the markets higher with advances significantly outnumbering decline. Energy and consumer discretionary are the big gainers, even as financials drag.
State Bank of India trims its growth outlook and cautions on margins going forward, while Kotak Mahindra Bank misses expectations on business growth, slows to a 3-year low.
Marico springs up on delivering volume growth ahead of analyst expectations, also eyes double-digit growth going forward with rising contribution coming in from foods and premium personal care.
Crude oil prices drop after OPEC Plus decides to increase output by a higher than expected 4 lakh barrels a day in June. Stocks of oil marketers and other crude-sensitive businesses perk up.
Legendary investor and Berkshire Hathaway chairman and CEO Warren Buffett will step down as the CEO by year-end, even as he intends to hang around. Greg Abel, who leads the non-insurance business, will take charge.
Very good afternoon. You're watching Halftime Report on CNBC-TV18. I'm Ekta Batra and with me is Mangalam Malu. Well, it is definitely a good day for the broader markets and it is blue, all blue today, but nonetheless all green today except for the Bank Nifty, which is down around 0.4% at this point in time. We really have a lot of traction which is coming in for the broader markets. Let's see whether that sustains. Mid-caps up around 1.5%. The advanced decline ratio also sustaining at around 2:1. So that looks good in terms of the screen. Lot of stock-specific action. Kotak, SBI, those are the stocks that we're discussing. ONGC also down around 2% at this point in time. So a lot about the banks this afternoon. But besides that, a lot about the broader markets.
A lot about the broader markets, Ekta. You spoke about blue. It is a very specific shade of blue, which, coincidentally, both of us are in today. And we come to you live from the CNBC-TV18 Motilal Oswal studio as well. While we're talking about individual stocks, don't lose sight of M&M. The stock is up around 2% right now. Sudarshan tells us that the business is a lot better. The results are a lot better than what the street was anticipating. And on the back of that, there is a spike in an otherwise outperforming stock in any case. We have the Adani Group stocks, which are doing well as well, and I see a peculiar uptick in Trent. Trent is up nearly 4% in today's trading session. This after having rallied 4% after the numbers and then fallen 4% post those numbers were reported in the next trading session as well. And start of the week itself, we have that stock higher by about 4%. But all of that in focus, we're also looking at Marico because it's good performing stock in today's trading session, an outperformer as the net profit and revenue beat street expectations, led by 7% volume growth, which is the highest that we've seen in the FMCG space so far. I spoke with Saugata Gupta, who's the Managing Director and CEO, who has been extended his term by the next couple of years as the MD and CEO until FY28. I asked him about the consumer sentiment and, more importantly, the expectations for the company from this year. Listen in.
I think we have been seeing a significant improvement in rural. I think rural, the demand seems to be good. It's far better than what it was. And I believe if the monsoon is, the overall monsoon forecast seems to be normal. So rural, demand should be okay. We are also seeing inflation cooling down a bit. Urban demand, I think, has been a little patchy in some kind of categories and certain section. It has been doing well. In certain, it has not been doing well. Having said that, I think what we have been talking about is that some of the organized FMCG players have lost share at the top end from some digital brands, at the bottom end from regional or smaller brands, which has become active in an inflationary condition. So I believe that the urban sentiment and the urban consumption will gradually improve, and therefore the volume growth this year should be better than what it was last year. Having said that, yes, there are some input cost pressures in the sector, which has been, I think, impacting bottom lines. But I think one needs to be resilient and manage that.
All right. So I'd like you to get a little more specific, because in your commentary, you've said a couple of things. You aspire for double-digit growth momentum in FY26, and also operating profit would be double-digit. I just wanted to understand what do you imply by double-digit revenue growth? How much of that would be volume-led? How much of that would be pricing-led? And when you are expecting double-digit operating profit growth, do you expect it to be in line with revenue growth, or do you expect some moderation in margins in the second year?
Maybe see it as follows. I think we have been now delivering, last quarter we delivered 6, this quarter we delivered 7. So therefore it will be important that we maintain this kind of a volume growth track record. yes, there has been inflation. We have taken around 30% increase in parachute pricing. There has been some increase in even Saffola pricing, which we have taken sometime last year, second half. When there was an increase in the table, a combination of input costs as well as the import duty. So I think there will be obviously inflation definitely in the first 2-3 quarters. So given the momentum we see in the digital brands and foods, we are extremely confident of food continuing to deliver 25-30% growth. Digital brands a little tad higher than that. So therefore, there is no. We are extremely confident of delivering double-digit revenue growth. As far as the bottom line growth, EBITDA, operating margin growth is concerned, operating profit growth, there are two factors. One is I think we believe that the copra prices, which is peaked and therefore it is going to move down. It will take a tad longer. We had earlier thought of a softening in Q1. We see the softening moving towards Q2. So therefore we will start picking up margins in the second half. The other thing that will happen is, as you know, that we have significantly improved margins in food, digital. Two of the brands are broken even, and Beardo is near to double-digit EBITDA. So we will push for accelerated growth in these two brands. So therefore, and of course, value-added hair oils, which has a higher margin, is expected to grow this time decently well. So all this mix change plus the fact that the second half we expect copra prices to correct definitely by Q2, and you will get the impact in the second half. We should strive to deliver double-digit operating profit growth this year.
All right. So if I had to break it down, basis what you've said so far, the first half of this year, high single-digit sort of volume growth is a possibility. Second half of this year, volume growth may move towards double-digit, with also margins between 19 to 20%. Would that be a fair estimate?
It's about volume growth moving towards double-digit. I think what we talked about is the revenue growth definitely delivering double-digit. Volume growth, what we are talking about is, I think we have delivered 6 and 7, and therefore we will strive to maintain this kind of a track record. As far as operating margin is concerned, as I said, that sometimes the percentage depends on the inflation. The numerator and the denominator effect, decides the percentage margin. Especially in high inflation, the percentage looks smaller. But the way to look at it is that I think as our aspiration is to deliver double-digit growth in their operating profit.
All right. What about international? You said that international has done extremely well, double-digit, and you expect that double-digit to only accelerate going forward. What do you imply by that? What kind of increased run rate do you expect in your international business, and what sort of premium share do you expect? Because that has increased from 20% to 29%. How much does that diversify going forward?
I think international business, I think we are pretty confident about delivering double-digit constant currency growth. It's difficult at this stage to look at how the individual currencies of the countries will play out. I think Bangladesh has been extremely resilient, and we have been delivering double-digit growth for the last few quarters. I think our entire endeavor is, in our key markets, we should be one of the fastest growing, companies, as well as, aspiring to get what I call top quartile operating margin in each of the markets. I think we have done that in Bangladesh, South Africa. In Middle East, I think growths are high, and we continue to improve our profitability with scale. Vietnam is something which we have to get it back on track. There is some consumption headwinds, and also the fact that some of the categories we are there, penetration is high. So therefore, we have acquired certain brands in the last, and also ventured into some of the brands which are top end in female grooming. So they have to grow at an accelerated pace for Vietnam to get back into double-digit growth. So overall, I think we expect kind of a steady kind of a growth from the international business. As far as the diversification is concerned, I think two things have happened. Our dependence in Bangladesh continues to decline, although Bangladesh growing at double-digit, but the dependence going down. And the second thing is that our share of premium business, we expect that business to continue to grow at 20-25%, so that share grows rapidly. That is definitely has a less commodity dependence. It is far more premium and a higher gross margin.
All right. And finally, before we let you go on the diversification, you briefly did touch upon foods and digital brands along with premium personal care. You did say you're expecting food to grow between 25 to 35% this year, with the other parts growing a lot faster. what do you intend to end the next year with when it comes to this overall portfolio, when it comes to revenue run rate and the sort of margins that you're targeting this year?
I think we should be hitting 25% this part of the business by FY27. And I think it's extremely critical that this part of the business grows at 25% to 20 to 25% plus for us to continue this diversification. At the same time, I think as far as the digital brands are concerned, as I said, that the cohort of Beardo and Plix, we expect that to hit 1,000 crore this year. This part of the business is already broken even, and therefore we have to drive accelerated growth. The second part, which is the Just Herbs and True Elements, there is still some bleed, although the bleed is marginal. Our effort will be to, while we grow at a sustainable pace of 20% plus, how do we accelerate the break even over the next 18 to 24 months? Food, I think we want to double in the next 3 years, and therefore at the same time, and food, the interesting thing, we have seen this with our oats and masala oats business, that at a certain level, today it's hit around 400 crore plus. We are almost near to our operating margin of the group, and therefore it is very important that we pick up 1 or 2 categories in food and get it to rapid scale, which will drive profitability.
And finally, any acquisitions on the anvil or any new category expansions?
I think we have enough on our plate, and I think it's important that we continue to grow. Yes, I think the 2 things we have done well. One is the total addressable, the TAM expansion of Saffola and the diversification international business. And there could be learnings so that we transplant into other countries some of the experiences.
All right, that is Marico, a confident-looking Saugata Gupta who expects a double-digit growth in the next year on both revenue as well as operating profits, with 6 to 7% volume growth sustaining. Large part of margin expansion comes in the second half of this year, led by their change in product mix and deflationary trends in some of their key raw materials as well. The stock doing well, up around 4.5%. We take a short break, come back, get you more on the markets and a lot of stock-specific action on the other side.
Welcome back. Just want to point out that there are a lot of stocks which are buzzing around in the broader market. So Sequence Scientific is showing a good amount of volume and price action. That stock is up around 8.5%. Shilpa Medicare is also showing good amount of traction on the upside, so up around 4.6% for that particular stock. Separately, just watch out for Trent, which is had a rough year, but nonetheless now it's seeing some amount of upside. So that stock is gaining up around 4% at this point. But let's talk about some big numbers which have come through. M&M reported a good performance in Q4, which was led by their tractor business. Sudarshan is here with a lowdown.
It's a strong set of numbers that M&M has reported, and both the segments have seen a healthy growth, and it's on the back of healthy volumes that even auto as well as sport tractor segments have seen more than 20% growth if you compare year on year. And the recent price hike that company had announced, it has helped company increase the realization both sequentially as well as year on year. So we'll start with the consolidated numbers. Their company has seen an increase of 20% each in both profit and revenue. Profit has increased 20% to rupees 3,295 crore. Revenue too has increased by 20% to, and it has come in at rupees 35,373 crore. Now coming to the standalone numbers which are being compared against our estimates. On the profit front, it has increased by 20%. Revenue was higher by 25%, and EBITDA has seen a sharp jump. It's an increase of almost 40%, and margin has increased to, and it has come in at 14.9% against our estimate of 13.8%. So auto margin has come at 9.2%. It's a minor increase from 9% that was in Q4 of FY24. But what has surprised very positively is the tractor segment, and their margin has come at a multi-quarter high levels. It has come in much higher than 19%. It has come at 19.4% against 15.8% that company had reported in the same quarter last year. It's an increase of 400 basis points, and that's on the back of the recent price hike that company has announced. And because of that, because tractor is a rich product mix, so tractor company basically gets higher margin in the tractor segment, and that helps in the in improvement of realization as well. Now coming to the volume, it was an increase of 19%. For total, auto volume had increased by 18%, tractor volume had surged by 23%. Now in the commentary, what exactly we'll be looking and we want to hear from the management what exactly it says on the demand front. Because if you remember, Maruti and SIAM had said that for passenger vehicle domestic growth, it's likely to be lower than FY25. So in FY25, passenger vehicle had recorded a growth in the range of 3 to 4%. But for FY26, SIAM has projected growth in the range of 1 to 2%. But for M&M, it's SUV. Majorly in passenger vehicle, they are in SUV, which continues to see a major growth. So inventory, discounts, and the domestic growth front, this is what we'll be looking in the commentary from M&M.
Take that point, Sudarshan. Thanks a lot for that. The stock up around 2% as their high margin business is doing well. But what's also doing well, once again, are the defense stocks. So pull up Bharat Dynamics, pull up Mazagon Dock Ship. All of last week, these stocks were surging, and start of this week, they continue to, move higher. So pull up on any of these stocks which are moving higher. So we have Bharat Dynamics, which should come up for you. Alongside that, we have Mazagon Dock as well, which has now moved to the high point of trade. But another stock which is surging right now is NetWeb Technologies. Vinny joins in to tell us how that company fared in the fourth quarter. Vinny.
Hi, good afternoon. So NetWeb, when you're looking at the numbers, a good set of numbers that's coming from the company in Q4 FY25. Strong performance overall. They beat the revenue guidance that they've given for FY25 in terms of revenue as well as PAT. They've spoken about around 1,000 crore revenue guidance for FY25, much about that, as well as in terms of profit of around 100 crores, so much about that in terms of profitability as well. Order book sequentially, we're seeing a bit of a dip coming in, but that's mainly due to the higher conversion is what analysts are highlighting. Overall, AI as a segment in FY25 has done very well for the company. That's been a growth driver. And in terms of overall the contribution for AI, that has also seen an increase coming in. AI now accounts for around 15% of the revenue versus last year it was just 11%. A strong beat overall is what analysts are highlighting. Beside bit of a miss in terms of margins, but order pipeline continues to remain healthy. The order book in terms of L1 orders, that's also quite healthy. So keep an eye out on NetWeb today, trading almost near the day's high spot.
Okay. All right, Vinny, thanks very much for that. So a lot of stocks buzzing around today. Well, we need to take a short break, but here is some good news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at just your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
Welcome back. You're watching us here on Halftime Report. The stocks which are not doing too well today belong to the banking space, and a large part of the contribution on the downside for the Nifty bank has been coming in from Kotak Mahindra Bank, which is the top Nifty loser today, down over 5% as business momentum for the company slows to a 3-year low in the fourth quarter. Abhishek joins in with more on that. Abhishek.
For Kotak Mahindra Bank, the business momentum on a YOY basis is perhaps one of the weakest that you are seeing in the last 3 years. That has led to NI and PAT being below our poll. Both the NI and PAT versus our poll are on the lower side. Deposit growth was at 11.2% YOY, which is one of the lowest that you are seeing in the last 11 quarters. Although sequential growth has been one of the best in last 4 quarters, coming in at 5.4% quarter on quarter. Advances growth has been at 13.5% YOY, one of the lowest growth that you are seeing in 15 quarters. That has been impacted by the unsecured portfolio like the microfinance, credit card, as well as the fact that corporate portfolio declined by 4% quarter on quarter. Net interest income growth is at just 5.5% YOY, one of the lowest that you are seeing in last 14 quarters. Now, operating profit growth is really weak, just 0.2% YOY, the lowest growth rate that you are seeing in last 11 quarters. Even the core operating profit, that is the NI plus fees minus OPEX, that's been weak. It has declined by 0.9% YOY. first time decline in 13 quarters, and it has declined by 0.3% sequentially. PAT has declined by more than 14% YOY, the highest decline in last 9 years. Subsidiaries, some of them were really weak. Their PAT declined both YOY and quarter-on-quarter. That was for Kotak Mahindra Life Insurance as well as Kotak Securities. Asset quality, 3-quarter low gross NP ratio, while cost to income ratio was at 5-quarter high.
Okay, all right, Abhishek, thanks very much for that. That's on Kotak. But let's in fact listen into what Ashok Vaswani, who's the MD and CEO of the bank, had to say about their Q4 numbers.
So it's difficult to say that. It really, what we said, the way I kind of like to temper it is it within that 1.5 to 2 times GDP growth? That is really a risk appetite statement, right? Because if the economy is going at a certain rate and you're growing too fast, then obviously you're taking too much risk. If you're going too slow, you're losing money on the table. So what we like to do is kind of say, hey, if the economy is growing this way, are we growing in that kind of ballpark? There's been a lot of pain, particularly in microfinance. We've seen a lot of pain. And in microfinance, while I think the industry, as well as Kotak, has shrunk the book quite dramatically, we brought our book down by about 33% on an average basis year on year. Just on a smaller book, the pain will kind of reduce. Based on the existing book, I think we'll see a better trend. And you can see it in our slippage numbers, right? For the last 2 quarters, our slippage numbers are coming down, which is a clear indication that losses will kind of come down as well. There are other stuff in the horizon, which we'll see how it plays out. But generally, I'm cautiously optimistic that credit costs will be better.
All right, that is the management of Kotak Mahindra Bank. But SBI is another stock which is slightly under pressure despite their, numbers beating street expectations. The devil is in the detail, for which Abhishek joins in for more. Abhishek.
In SBI, the other income has actually aided in earnings beat versus our poll. A 19-quarter high with respect to write-offs actually aided the gross NPA ratio to be one of the lowest that you are seeing in last 10 to 15 years. Take a look at the PNL. The NI is a beat on our poll. PAT, on account of higher forex income as well as treasury gains, has beaten our poll. So 19-quarter high write-off, more than 10,000 crore in this quarter versus less than 2,000 crore in the previous quarter. That's aided the gross NPA ratio. Net interest margin is at 15-quarter low at about 3% versus 3.01% in the previous quarter. The NI growth rate on a YY basis is at just 2.7%, which is one of the lowest that you are seeing in last 5 years or 20 quarters. Return ratios remain weak, 5-quarter low with respect to ROA at close to 1.7% and ROE below the 20% mark. Slippages, they have been stable largely. A 10-quarter low slippage ratio of 0.41%. CASA ratio has improved for them for the first time in last 12 quarters, coming in at close to 40% versus 39.2% in the previous quarter. Now, loan growth has been at 12% YOY, the lowest loan growth rate that you are seeing in last 12 quarters.
All right, Abhishek, thanks very much for that. So that's on the largest bank of India. And in fact, let's listen in to the management talking to CNBC-TV18 on the quarter gone by.
More than the tempering, I think what we are aligning with the nominal GDP growth rate. And last year we grew almost 3 to 4% more than the nominal GDP. And we expect now that there will be some slight moderation on the corporate growth side. Whereas SME, agriculture and home loans are doing very well. So I think these sectors will contribute to the growth, and there could be some moderation on the core sector. This is what our expectation is. So while we have good visibility on the corporate book, both on the pipeline for sanctions but not disbursed, and also the pipeline proposals which are in discussion aggregating to around 3.4 trillion rupees, we see maybe around 12% growth rate on that. Why am I moderating on the corporate growth is that we see an effort to deleverage further on the corporate side. Sure. And we are witnessing a great amount of prepayments and which is bringing down the growth rate. Otherwise, the mid-corporate is growing well. Large corporate seem to be on the deleveraging spree.
All right, with that, we'll slip into a short break. On the other side, Manish Athiramani, prop trader and technical analyst at Deen Dayal Investments, joins in with some trading strategies. Stay with us.
Welcome back. You're still tuned into Halftime Report on CNBC TV18. M&M reported its Q4 numbers some time ago. Let's get you what the company is saying from their press conference.
3 to a 4.5% or lower number is a difficult one, but the business has done that very well and puts itself on the path of much stronger growth going forward. What we'll talk about also is our scalable growth gems and the foundation that we are building to ensure that they can be profitable and strong businesses for us in future. But all in all, a growth of 20% from a profit standpoint, and we continue to maintain an ROE of 18%. That's what you see here. While revenue is up 14%, profit is up 20%. Profit does exclude the mark-to-market on KG Mobility, which is SsangYong. It really has no impact from a cash standpoint or an operating standpoint. But we had seen profits in the prior year and losses in this year, which essentially offset each other. But in the percentage numbers, you see that impact, and which is the reason why we've taken that out. And 20% profit growth in the current environment is clearly very strong execution, and you'll see that across multiple businesses. Standalone is up 17%, both revenue as well as profits. And with that, we'd like to share a chart on the positioning of our various businesses. And you see this in terms of competitive position on the y-axis and the scale of the business on the x-axis. As you would expect, auto and farm are in the top right, a very strong competitive position, and both scale businesses. Mahindra Finance and TechM have scale, but aren't quite at the level of where we'd like them to be from a competitive standpoint. And there's more work to be done to take them higher on this graph. And then we have our growth gems, and we are now categorizing them into what we call scalable growth gems that have a strong competitive advantage in their industries, and emerging growth gems, which have some competitive advantage, but there's more work to be done to be able to get them higher again. And we are defining valuation targets for them, 2 to 3 billion for scalable growth gems, and getting to 1 billion, which is where we start getting a lot more competitive in that industry for emerging growth gems. Let's look at the performance across businesses. I'll cover auto and farm fairly quickly, as Rajesh is going to cover that in a lot more detail. Key highlights for auto. Number one, SUV player. Very strong electric vehicle order pipeline. Deliveries have begun. And we have very quickly gotten to the number one share from a revenue standpoint already. And disciplined execution with high margins. You see that in the numbers. Farm, new products, a strong geographical focus to drive growth outside India. Margins up 210 basis points, and you see that in the numbers as well. Mahindra Finance has seen a 17% growth in assets under management, despite pivoting to a business which is much less volatile, much more stable. And you see GS3 under the 4% threshold, as we outlined earlier. We have deprioritized disbursements last year to make sure we can transition the business to a more stable GS3 level. And you see that in the numbers as well, which is a very strong profit growth at 16%, and a very good outcome in terms of that transition. TechM, good deal wins, strong pipeline, bringing in more customers from a consumer and a BFSI standpoint, continuing well on the margin trajectory, and therefore positioning the business very well on the path that it has outlined already. Let's talk a little more about growth gems. Hospitality. 5 years ago, we had 3,700 room keys. Today we have 5,800. And we're moving to a target of 2 to 3 times that, which we'll cover in more detail later as those plans are finalized, which will effectively give it a 5x growth in terms of room keys alone. Logistics, we see revenue as a key metric there, up from 3,500 to 6,100. And they're targeting, again, close to a 3x growth in the next 5 years. And there also, we will come back to you with further details on that as those plans are outlined. With the new CEO, Hemant Sikka, coming in, we see that business on a very strong growth trajectory. Life Spaces, these are the numbers that have been presented by the Life Spaces team publicly. We have grown significantly from 670,000 in pre-sales 5 years ago to 2,800 crores today. And the target there that the business has outlined is actually 9,500 crores, which we're taking the liberty of rounding up to 10,000. And that is really a 14x growth over this decade and positions this business extremely well. More importantly, again, has been shared by the business. Everything that's required in terms of pre-sales in the next 5 years, 70 to 80% of that has already been acquired in terms of land, and it's only execution from here on. There's also a very strong focus on profitability, and which is the reason why we are going ahead with the rights issue, putting more capital into the business and enabling its growth. Sustain, up 5x, our renewables business. Last mile mobility, up greater than 10x, possibly even 15x by the time we are done with it. Up from 14,000 to 78,000 already. So you see a significant growth over the last 5 years. And we are still, again, trying to target 2 to 3 times that growth over the next 5 years.
Okay, so that is the management of M&M addressing the numbers that they reported. The stock, as you can see, is up around 2%, indicating that the SUV revenue market share is currently stable, and the LCV market share is at around 52.3%, up around 450 basis points plus on a year-on-year basis. Tractor market share also stands at around 41.2%. We'll keep getting you more updates. As of now, we need to take a short break. We'll get you more on the numbers as well as some technicals. Stay tuned. Welcome back. Well, for the markets, it's holding steady. So we have the Nifty, which has gained around 100 odd points at this point in time. We have the Bank Nifty, which is sulking, so down around 0.5%. And that's really the sore point in today's trading session. No incremental gains for the mid-cap index, but it's holding steadily. So that's a good thing to see. Watch out for Biocon. It comes out with its numbers this week. It's holding up quite well ahead of that. So up around 4 odd % currently for Biocon. But Manish Hatiramani joins in to discuss the technicals of the market now. Manish, hi, welcome to the show. Well, it's definitely a very lively market except for the financials. What's your approach today? First for the index as well as for specific stocks.
Good afternoon, Ekta. Thank you so much for having me on the show. Starting with the Nifty, I feel 24,600 has a stiff resistance. If we can get past this 24,800 and then 25,000 would be the next target levels. Since this can prove to be a bumpy ride like we are seeing for the last few days, even the target levels have now reduced. We have a short-term support at 24,150, breaking which we could slide down to 23,850 to 23,900 levels. Bank Nifty, this is the index really which is playing spoil sport. And that is what is not allowing the overall sentiment to be fully bullish across. We are close to a very clean support level of about 54,650 to 54,700. If we break this, the index could drop down to 53,850. On the upside, we are going to battle a resistance level around 55,600. Having said that, since we haven't really broken down, I'm working with 2 buy calls. The first one is on an ITC. For a target of 450, stop loss of 420, 390 to 400 was a strong base for this stock, and we have broken out of this after a significant period of consolidation. The second one is a buy on Adani ports for a target of 1450, stop loss of 1200. This stock was in a sideways zone between 1000 to 1200. We have seen a burst of volume thereafter, and that is positive for the stock.
All right, all right, Manish, thank you so much for joining in and giving us your call on the index and a lot of individual stocks. The Adani Group on top of your list, all the stocks out there doing extremely well. But the FMCG stocks are actually doing well in today's trading session, led by Marico's numbers. We'll take a short break. On the other side, we'll get you excerpts from our exclusive conversation with the management of Tata Consumer. Stay with us. Welcome back. You're watching us here on Halftime Report. I recently spoke with the management of Tata Consumer Products, the MD Sunil D'Souza. He spoke about a couple of things, of which three things stood out. One, they're launching a Korean range in the Ching's portfolio. Secondly, they're making a foray into the sports drink space. And thirdly, they are looking at a big brand ambassador for Organic India. Let's listen in to what they had to say about the consumer sentiment, the innovation pipeline, and growth going forward.
The good part is over the past 5 years, I think top line double-digit, 13% revenue, 14% EBITDA, 23% net profit. I think it's been a good run for the last 5 years. Going forward also, we're continuing to target an aggressive growth rate, double-digit top line. Again, EBITDA margins, we're extremely aware, saying we're one of the lower this thing. So that will grow far faster than top line. And yeah, I mean, the aim is to double TCPL in double quick time.
Okay, so, you know, one of the things that you had said also in the past, that you were 15 minutes into a 2-hour-long movie. How far along have we gone since then?
I would probably be 35 minutes.
35 minutes?
Yeah. So we've still got a long way to go.
I remember you telling me that, you know, at a business case level, Capital Foods could actually do 30% margins versus the 24% that when you acquired it. Even organic, you were hoping of a manifold growth out there, largely because of, one, its quality of product, and secondly, the distribution mismatch. How much of that has already happened right now? In how many outlets are these products available? What can we expect in the next couple of years?
It took us a bit of time, both for Organic India and Capital Foods, because understanding the categories, the category dynamics, the outlets which mattered for weighted distribution, and the kind of back-end stuff that we had to do to make sure that we maintain the margins. We probably took around 4 to 5 months.
More than...
We probably thought we will get it in a quarter. It probably took us 5-6 months to understand the base stuff. So roughly half the year. And from then on, it has been an acceleration, right? Now you will see an expansion of two things. One is you'll see an expansion of distribution.
Yeah.
And more importantly, you will see a portfolio expansion happening, right?
330 crore was this quarter. 500 crore per quarter run rate happens sometime in the middle of this year or start of
We should be getting. The second half of this year should be peacefully that kind of run rate.
What about, you know, you increasing the TAM in these? You spoke about soulful, you spoke about organic. There's a lot more that they can stand for as well. Are there any thoughts of increasing, you know, the positioning of, expanding the positioning of Organic India and Soulful beyond what they are right now?
So absolutely, Mangalam, the whole theory was that very strong brands with very strong propositions and therefore could leverage into adjacencies very, very quickly. And let me give you some examples, right? Soulful, we've just entered Rusk. Rusk is a huge, huge segment across the country. We're in the process of right now identifying plans to expand that. That's example number one. Example number two, when you said Capital Foods, right? In Capital Foods is Desi Chinese. And one of the big TAMs which was not tapped aggressively in the past was noodles, right? Now, noodles, we were only playing in the multi-pack segment aggressively. But the bigger segments, if you look at it, is the 10 rupees and the 5 rupees.
Yes.
The 10 rupees, there is money to be made, very decent money. You have to just get in there and get this thing. And I've got a differentiated product. I will never play mainline noodles,
yes,
right? With Ching's. But there is a differentiated play to be had, and we're just about starting off expanding on that route. That's number two. Capital Foods, the other thing, I think we talked about it briefly, is the Korean craze.
Korean, yes. Can Desi Chinese also turn into Desi Korean?
Absolutely. I mean, it has got every right to enter that very simple.
Korean, gochujang and all of that is...
So you will see a range of Korean cuisine launches coming out under the Ching's portfolio very shortly.
Let's talk about Marico now. Start of last year, you said it'll be 1,000 crores last year. You didn't anticipate the competition that came in. You ended about 850 crores. So it's a given that 1,000 crores happens in FY26. What's the growth path here? Because, you know, there is strong competition. And I was reading a note that came in from Varun Beverages, which said that 59% of their volumes are actually generated from no or low sugar products. Functional beverages are doing extremely well. Are you considering entering the sports drinks, what, say, the others are doing right now?
So Mangalam, in Marico, we've consistently maintained that we will not go up against the majors, right? We will do a differentiation.
So no fizzy drinks.
So we will not get into carbonated drink. We are, I would say in the next 15 days, you'll see a sports drink come out.
Okay, and that's a headline.
We entered energy, but we didn't get it right. You're in the process of rejigging it. You'll probably see a relaunch pretty quickly. You will see a slew of functional drinks. I mean, we're back on the growth path. Overall, for the last quarter, I grew 17 on volume, 10 on value. But I exited March as a 38 on volume and 26 on value.
Got it.
So there's no reason I will not grow 30% consistently here on.
Electrolytes in your drinks, or what's the scene?
We're looking at that category very, very closely. I was in Chennai and Hyderabad, and I did see a plethora of offerings out there. But it's a very fragmented space. So I do think there is an opportunity to play out there.
When you look at Tata advertising, it's not a Pepsi, it's not a Whirlpool, it's not aggressive in your face, this is my brand and this is what it stands for sort of product. Are you looking to change that?
Capital Foods, you will see advertising ramping up. We've just signed up, I would say, one of India's biggest icons for Organic India. So to come out and talk about Organic India, you'll see that playing out shortly.
Who's that?
You'll see that playing out, Mangalam, shortly. Or we're looking at another famous celebrity because we've done a whole relaunch of Tekli. People drink green tea. One of the primary reasons consumer thinks it aids weight loss. So we've added L-carnitine onto the green tea and we're backing it up with a celebrity to endorse it. So it's not across the board this thing, but targeted advertising, we will ramp it up.
Right, insightful conversation coming in from Sunil D'Souza of Tata Consumer Products. You can catch excerpts of that all through the day. With that, we wrap up on this edition of Halftime Report. Thank you so much for watching.